Hey everybody, Ridgely here from Harding Szymanski, and I am excited to be joined by our benefits supervisor, Matt Childress, who's going to talk to us about certain things that you really want to be thinking about as we approach the end of the year. So Matt, first of all, thank you so much for your time. I appreciate it. And we're going to kick this off with a discussion on required minimum distributions, or what most people call RMDs. So first of all, what is an RMD?
An RMD is a required minimum distribution that the IRS is mandating that employees take out every year, provided that they've reached the age of 73. If you're over the age of 73, you're likely needing to take a required minimum distribution by the end of the year.
So now, when they say required, what exactly does that mean? I mean, are there fines? Are there penalties? Is it mandated by the government? What does required mean when you say required minimum distribution?
So the requirement has a lot to do with your age. If you're over 73, you fall into a category of an ownership if you're not actively participating in the plan, such as if you're terminated, or if you're a spouse or related to the owner in any way, you could be required to take a distribution to avoid pretty substantial penalties. In the past, it was 50%. It has been reduced down to 25%. So it's very important that those distributions are made by the end of the year.
Excellent. So knowing that I have to make an RMD, are there any tax planning or tax considerations that I should bear in mind and think about?
So the amounts are pretty much set. It's based on your life expectancy. There's a table that's looked at and your balance at the end of the prior year. So that amount is set. However, if you do have an IRA, you could make a qualified charitable donation that won't show up on your year-end income statement.
Outstanding. All right, so let's jump over to the concept of contribution limits. So now, what are the contribution limits for 401k plans?
The 401k plan contribution limits for 2023 are $22,500. However, if you're over the age of 50, you can make an additional catch-up contribution for an additional $7,500, meaning that if you're over 50, the limit is $30,000.
Wow. And if I realize that I, for whatever the reason, have not maxed out these contributions, is it too late for me?
It's not too late. You have up till the end of the year to make those contributions. What you want to check is if you can make a deferral change into your plan. Most plans allow that to be done at any time. So you want to get with your TPA or record keeper to make sure that you're on track to meet those goals.
Thank you. Now, I also heard that coming up soon, if I'm over the age of 50, I may not be able to do pre-tax anymore. Can you please explain that?
So Secure Act 2.0, there was a ruling that if you meet a certain income bracket and are participating in catch-up contributions, you may be required to make after-tax Roth contributions instead of the traditional pre-tax. Now, that ruling was set to go into effect in 2024. However, recently they pushed back that date until 2026. So for now, you're good to keep contributing as pre-tax as you were.
Excellent. I like to hear that. All right. Now let's talk a little bit about year-end employer contributions and tax projections. As an employer with a 401k plan, if I've had a great year and I want to make a larger contribution, what can I do?
Absolutely. You'll want to check to see that your plan document allows for a year-end contribution. Typically, these will go in as a year-end match or a year-end profit share. These are great because not only are you posting this to your retirement plan, but your participants' retirement plans, so that's an added benefit. But also, employer contributions are considered tax deductions, so you'll be able to use that to help out with your year-end taxes.
Critical question on that. By when do I need to do that?
So the deadline is actually your tax filing deadline for the 2023 plan year. So you don't have to worry about getting these contributions in by the end of this year, just as long as it's in before you file your year-end taxes for 2023. That's why we recommend you let us know if that's your goal. That way we could do some projections, run some different scenarios, and ultimately you can make that decision before filing.
Fantastic. Matt, thank you very much. As we're getting closer to the end of the year, everybody has these issues in mind, wanting to make sure they make the right decisions, the right choices. And for that, we have Harding Szymanski to help with great counsel and great advice. And Matt, thank you very much. Much appreciated.